So if you are someone who's looking to buy a residential home, meaning you want to buy a home that you want to live in, you have a family, you're trying to like start your whole family life and everything of that sort, well, I would probably say you probably want to sit on the side right now and just see how things play out, right? Because what's up, everybody? Welcome to episode 34 of the Bag Talk Show. So today we're going to be talking about, are we going to experience another '08 real estate crash? Is this really about to happen again, basically, right? Because we have two sides right now. We have one side like Dave Ramsey, who's talking about this is not going to be another '08. We're not going to see it again, relax. But then you have a side like Patrick David saying, yes, all the data says we're about to hit a real estate crash. The next 6 to 24 months are going to be really, really bad. And both of them have amazing followings, so people don't know who to believe, right? But today we basically want to look at data and talk to you guys in a very clear way. Like, we're not going to pick any sides, we're just going to look at numbers and see what they tell us, all right? So let's just dive in, bro. What we got for them?
All right, so like you said, we're going to be looking at data, right? We have data in front of us, and we're going to go through numbers for you. So you know we're not taking this out of thin air, and we're going to look at the numbers, and then we're going to tell you our opinion based on what we see.
Yep.
All right, so the first thing I will look at is homes sold. Right, how many homes are being sold? What we noticed is that there has been a slight decrease in the amount of homes that are being sold. Okay, just a slight decrease though. It's nothing crazy. It's nothing like super substantial, but it definitely shows that there's a slowdown in homes being sold, and that just pretty much kind of points to the fact of what are we doing? We're slowing down demand. All right, so Jerome Powell, the head of the Federal Reserve, he's increased interest rates, as we all know, in order to bring down demand. That scares buyers out the market, right? So it just makes sense that the amount of homes being sold are starting to decrease a little bit. Yeah,
that was the plan all along. Like, he wanted this to happen. We wanted everything to play out exactly how it is, and it's doing its job. We're not seeing a crazy shift, anything like that, like you mentioned, but demand is, coming down a little bit, which speaks to the pricing of the homes, right? So let's talk about that real quick. So the new listing median price for homes, you see that coming down as well now, which makes sense because obviously we saw an increase in interest rates. Then interest rates go up, this means the home prices will come back down. So it's not like we're seeing, homes were priced at 200,000, they're coming back to 100,000. We're not seeing that crazy change, but we do see a change happening where you see, okay, 200,000, it's back down to like 185, 190 right now.
Yeah, and if you speak to agents and you'll hear their sentiment on it, right? Like, when things were like super hot in real estate, let's say the homes in the area are typically 200. You could list a home for 230 and get it sold, right? 230,000 get it sold. And now they're kind of like, all right, we can't be so greedy anymore. We have to now list it lower than we were back then. That's why we see a decrease in it, right? Yep. And people still do buy things over asking, especially in certain areas. But like I said, these agents are just noticing like, all right, we can't be super greedy anymore because the market is not as hot as it was, right? People who are in the market right now pretty much have money. It's not just anybody. Back in the pandemic, remember, anybody could buy a house because everybody had money.
Yeah, I was about to say, we're going to make that point because like, if you think about it, right, if you're a residential buyer versus if you're an investor who's looking to buy like investing type of property, you guys are in different worlds right now.
Different mindsets.
Exactly. So yeah, like back in 2020, everyone was trying to buy a crib, and everyone was buying a crib because money was just flowing.
Yep.
It is changing.
And interest rates were super low. So
Facts. But basically, we said new listing median prices, right? Let's just look at the median sales price. The same story. Nothing's really changed. So speak on that.
Yeah, the median sales price has also decreased a little bit, right? And like I said, it's nothing too crazy. These are just, it's like things are starting to turn over. How drastically will they turn over? That's left to be seen.
Right.
I mean, if I'm gonna just say my opinion really quick, I don't think that they'll turn over super drastically to the point where we're talking a crash. But we'll get into detail on why we say what we say. Yep. But we do see a decrease in the median sales price. Why? Because demand is not as high.
Yeah, I mean, if you look at it, right, we've been seeing pricing way too high of homes. So is it going to continue forever? No, nothing can continue forever. Look at the stock market. It ran up ridiculously high and then it balanced itself out, right? Like on the data that we've been showing you guys, it's showing you different years like 2019, 2020, 2021, and 2022. Obviously, 2022 numbers are way higher than everything else. So yeah, when people are saying it's going to be a huge crash, I mean, is it going to be a correction? Is it going to be a pullback? Yeah, I think that will happen, but I don't see it going back to 2019 numbers. I don't see an '08 crash per se, because honestly, if you're trying to predict an '08 crash based on numbers, that's not really fair, because what happened in '08 was way different than what's happening right now. There's literally laws and regulations put into place that will not allow an '08 to happen. So that's another thing that goes into it. But before we give our opinion, which we kind of already did, let's talk about the supply, right? Let's just go over this chart. This chart is super interesting because it's showing you data from over 1965. Sheesh. Okay, so when you look at it, right, bro, right now we're at 9.3, it says, is a monthly supply of new homes, right? So when you look at that, it's basically showing you supply is going up, right? Which, once again, makes sense from what we're talking about right now. Like, everything is aligning to what we're saying based on the other data that we spoke about. But the crazy part about it is, you see these great things right in front of you, right? Those time periods were like basically when a bear market happened, a recession happened, and the rate was around the same. So that's why some people are speculating that we're approaching the same numbers that we had earlier. So are we going to see a crash? Once again, it's kind of a different story than it was 40 years ago or 50 years ago, right? So it's not really fair to say that.
At all. And ultimately, when it comes to real estate specific crashes, yes, that happened in 2008 because of subprime lending and everything. There was just different dynamics that went on back then as opposed to now. But these other recessions, real estate actually fared pretty well. We've spoken on the channel about how in recessions, home prices have actually gone up in almost every recession that's ever happened. So even when you see these recession time periods where you see the supply going up, it makes sense because in a recession, that means that people don't have money to spend. So that means that the supply of homes will go up. That's what's happening right now. Literally, we're trying to draw the money out of the economy because there was too much money flowing and interest rates were way too low, keeping all these asset classes super stimulated. So
it's like the inflation thing. Like we're trying to bring the power of money back to what it used to be. Like, inflation is way too high, so the way to control that is honestly interest rates. I didn't mean to cut you off, but that's really what it is.
No, exactly. So that's why in all those time periods, you see the supply of homes going up because there's not enough buyers. That's just literally what a recession is. And then you see how in this graph it comes right back down. That's when they get us out of a recession. Because in order to get us out of a recession, they have to stimulate money again. So then they now drop interest rates, stimulate the economy. That means homes start getting bought up again, and then the monthly supply of homes drops. So right now we're technically in a recession. You see demand slowing. That's why you see the monthly supply of homes growing.
Yeah, and then the other point, that we want to say based on just, once again, data, right? These are all numbers that we're bringing up. Interest rates. So everyone's talking about interest rates and saying we're going really high again. To be honest with you, based on the graph, we're actually not going really high again. We're going right back to, we're still below average, I would say. If you look at it, you've seen numbers as high as 17%, you've seen numbers high as 10%, and then now we're at like 5% right now. Just because you saw 2%, 3% in the 2020 time period, that's not normal. That's the lowest we've been in like 40 years. So just because you saw that doesn't mean that was normal. That's actually completely opposite of what we're used to seeing. So we're going back to what we are supposed to be at.
Exactly. And even that 2020 number you're talking about, that might have been like the lowest interest rates we ever seen in the housing market.
That's why people went crazy though.
Yeah,
that's really why.
That's why it ran up when we saw record numbers. Yeah, that's fact. If you saw record numbers in interest rates on the low side, you're going to see record numbers in housing prices on the high side.
Yeah.
It makes sense. So now we're just stabilizing. We're getting to a period of normalcy. Like we say, you look at the graph, you can see the interest rate is right where it's supposed to be. It's actually low-key still lower than a lot of time periods.
That's actually one of the biggest things, right? So media sells you a lot of different things, and that's why you have some people saying, yo, watch out, the interest rate could go up to 7%. Well, yeah, it can, and honestly, that's been the average for over 40 years. So if it does go to that, we're at 5%, we're below average. So yes, obviously, you wanted to take advantage of what happened in 2020, and if you didn't take advantage of it, that's okay, but that doesn't mean you're not going to have another chance again. So that goes into our opinion now, right? So if you are someone who's looking to buy a residential home, meaning you want to buy a home that you want to live in, you have a family, you're trying to like start your whole family life and everything of that sort, well, I would probably say you probably want to sit on the side right now and just see how things play out, right? Because interest rate is continuing to go up, right? Yes. So you're like, oh, maybe I should just get it now. But unless you really have the funds to get in now, you might want to wait a little because, as we said, we do see a little pullback coming.
Yeah, we see a pullback coming. Like we saw with the recession graph, whenever a recession hits and people are not buying, they have to stimulate the economy again so that people could buy, right? So at that point they're going to lower interest rates in order to do that. So maybe you want to wait on them to lower interest rates
a little bit,
or at least a little bit, and if not, at least wait for prices to come down because they have to correct, like you said. And I would really speak to investors right now and tell investors, you guys should be the ones to continue to buy, because rents, right? We're gonna put rent numbers up there for you. Rent right now is at record highs.
Yeah, so I wanted to speak on literally that point. Rent on this graph, as you can see, right? It literally is showing you it's cheaper to rent than it is, it's more expensive to rent than it is to actually buy a home right now, right? People always say, yo, homes are so expensive, blah, blah. Renting is actually more expensive, which means, put your hats on, right? If you are a homeowner, right? Obviously, we're only speaking on the price. So obviously as a homeowner, you have other things to worry about, like insurance, fixing the home, et cetera, et cetera. Take that out the picture right now. Let's just focus on you own a home. You're able to charge record high rents right now. So that makes a lot of sense if you're an investor, but only if you have the funds to do so.
Yes, you have to make sure you do actually use our calculator. Please use the calculator. We have that link.
Shameless plug.
For real, shameless plug. Our calculator will show you all the expenses you could expect to be spending as an investor in real estate, because you have to account for these things. If you can handle that, if your numbers look good, and you're getting record rents, are you serious? This is a gold mine right now in real estate for investors. Like, you know, people are looking at the high prices and the interest rates. No, but when you do your numbers, if your numbers work, oh my gosh, this is beautiful for investors. Please hop in.
Yeah, that's the thing. At the end of the day, like, look, right? So we want to make this very clear, simple. If you're someone who's in the residential world, you might want to just see how things play out a little bit. Because once again, we made a whole video on the market is changing, layoffs are happening, so you might have to worry about different things, right? So just let things play out. But if you're an investor right now, make sure you have enough money in the bank, because let's just say you get a home, you're not able to find tenants. Yes, rents are super high, but if you can't find tenants right now, you should be able to pay off a month or 2 or 3 for that home before you buy it, right? Now, if you're trying to do like a buy and flip type of scenario, you know, like fixing it up and then flipping it, well, at the same time, just make sure if you're buying a home and you're fixing it, you're expecting the after repair value to be, let's just say 50% more than you bought it for. That might not be the case, because the homes around you have gone down because of what we're seeing in the market with the median sales price. So to put it in perspective, right? Let's just say you buy a home for 100K, right? And every other home around you is worth 150K. Okay, so you bought an undervalued home. Now all of a sudden you put money to fix that home, you're thinking, yeah, this is lit, I'm about to buy a home, fix it, now it's worth 175K according to my estimations, right? So all of a sudden now, something happens, yo, it's not worth 175 no more, because all the other homes actually came down to 140. So now you're like, wait, I just put all that money in, I'm actually losing money on that home. So that's why you want to be smart as an investor.
Yes, please. I'm telling you, it's all a numbers game, as you can tell. Like, it's really a numbers game. So be prepared for any market changes. And then for people who can't afford a home right now, just use this time to learn about real estate. Like, we have a whole section on Rookie Mondays that specific to real estate investing, right? You want to make sure you get your knowledge up in this time period, find other streams of income, make sure that you're doing what it takes so that when the market does change and it comes in your favor, you're prepared to take advantage of it. So if you're an investor right now, take advantage right now. For people who are waiting to just buy a home, get your knowledge up, get your money up, and then dive in. And ultimately, if your numbers are right, it's never a bad time to buy real estate.
Exactly. Real estate will always be there. Stock market will always be there. Crypto will always be there. Every asset will always be there. So you don't have to worry about that. But if you're still watching and you like this type of video, make sure you like, comment, and subscribe. Make sure you also click that little notification bell, because we drop
2 videos a week
and you don't want to miss them. Make sure you check out our episode on Monday. But until then, peace.